Hello and welcome to our webinar, The Right Technology for Winning More Mandates, jointly presented by Affinity and Finalis. I'm really excited by my all-star panel who are joining me today. My name is Paul Ross. I'm head of marketing here at Affinity. We are a relationship intelligence platform provider where we have well over 2,000 clients around the world, 150 plus of investment bankers of all sorts of different shapes and sizes. And I'm really excited to be joined today by Fed. Fed, could you give yourself a quick introduction?
Yes, absolutely. And thanks so much to Paul and to Affinity for bringing Finalis along in this webinar today. So my name is Federico Baradello. I'm the founder and CEO of Finalis. Finalis is a leading broker-in-a-box solution for investment banks, placement agencies, and independent deal makers. We're currently working with 130 investment banks across the United States, delivering a technology-enabled regulatory affiliation and compliance back office solution.
Awesome, thanks, Ed, and welcome to the session. I'm also joined by Michael Lamb from Corporate Advisory Solutions. Michael, could you just give yourself a quick introduction for the audience?
Sure. Again, my name is Michael Lamb from Corporate Advisory Solutions. We're a boutique investment and merchant banking firm that specializes in tech-enabled outsourced business services companies, and we have a global reach. So a lot of our clients are all over the world.
Excellent. And we're also joined by Dave from Swilken Bridge Capital. Dave, would you like to introduce yourself?
Absolutely. Thanks, Paul. My name's Dave Sundorf. I'm with Swilken Bridge Capital. We're a boutique investment bank that specializes in debt capital raises for the lower middle market. Companies typically generate less than $5 million of EBITDA and are looking to raise between $5 and $20 million.
Awesome. Thanks, Dave. Welcome again. This is a fantastic panel with a huge amount of experience in M&A and various other types of investment banking advisory. So hopefully you're going to have a really detailed and fun conversation for us for the rest of the session. So really the purpose of this conversation today is for us to look at, to a certain extent, how the use of technology is kind of changing how our industry is operating and what we're doing on a day-to-day basis. And doing that especially in the context of what's been a pretty honestly insane deal environment and mandate environment over the last 18 months. That doesn't appear to be slowing down at any time soon. And I think there's kind of four main things we're going to chat about in the session here. Is like, how is technology driving and changing directly both the clients that myself and Fed we deal with on a day-to-day basis, but also Michael and Dave's operations within their own firms for kind of winning mandates, how they're executing and driving and managing their deals, tracking and compliance. And then some of the new areas where we're seeing kind of new things like data and analytics coming into our industry, which really hasn't been a key part of how we've done our operations historically. So it's going to be a really fun conversation that we'll kick off with maybe a little bit about state of the market and how we're seeing that impact operations. So clearly, like if we look at the state of our environment and the market that we're operating in today, there's some pretty insane data that came out in 2021 in terms of the volume of global M&A, but I think that's also reflected in the types of activity that we're seeing within the firms that Michael and Dave represent. I think one of the key things about this is not only is it the execution of these deals, but it's how do our advisory firms actually win those mandates. And it's a very broad topic, but Michael, maybe if I could start with you. I know your firm has been very intentional about using technology to build a platform and audience for your firm. I see constant marketing activity well beyond like, here's the latest deal, which I know you also communicate. So tell me a little bit, in this environment where there's so much business, why have you invested and taken that approach of using some of this technology to market your firm as a thought leader within your particular niche or industry area?
No, it's a great question, Paul. I mean, for us, I feel like during COVID, we really we learned a lot about the importance of technology. But before we even got to COVID, our deal team was really focused on how to best interact with each other and collaborate both internally as well as externally with our clients. And I've really found that there were a lot of tools that were out there, but there was nothing really that fit the bill several years ago that really helped do that all together in one place. And that's when the search began for us. But I will tell you, I think when I look out at the boutique landscape of other M&A advisors, whether they're a generalist or a specialist like us, I really feel like from an efficiency perspective, I don't know how companies can just still operate today on an Excel spreadsheet to manage their engagements and everything else that goes on with it. It's just getting to a point where it's become so complex that the workflows need the right technology support to do it.
No, I think that's really interesting. I think you and I have talked about this in the past where, you know, what your team has been doing, your deal team has been doing, looks more and more like what my team does from a marketing perspective in terms of a constant engagement, collaboration, tracking what's actually happening. So I think that's a really important point of like how that's starting to impact what you guys are doing. Dave, I know you may well be in a kind of a different approach or different state than Michael, but how do you and your firm think about the use of technology and kind of building your book of business?
Yeah, so technology has really enabled me to run a low overhead business and accelerate various processes within my organization. We use technology as a way to augment some of the relationships that we have and that side of the business. So we use data information that we've collected to improve conversations that we have with prospects, lenders, as well as service providers. It's really enabled us to expand the universe of available options to find individuals or organizations that are best suited for a particular situation. That could be a new lender that we're trying to connect with that's the correct fit for the mandate that we have. It could also be for attorneys or accounting firms that we feel like could provide particular insight or expertise into some of the deals that we're working on. In terms of business development, we typically develop ideal customer profiles, and we use that in our targeted marketing. So we're really going out to people that we feel like are a good fit for the services that we provide to try to be as efficient as we possibly can.
That's awesome. Yeah, and I think that's a really interesting point around building out your target market, as it were, your ideal customer profile, and then matching them with some of those other partners that you were describing. It really points towards the need for you to be kind of tracking and engaging on that. And it's also interesting to hear you're bringing in kind of external data into that model as well. Fed, I think that there's obviously the scale of the mandates that were available in 2021, and we're not necessarily seeing a slowdown yet, but there is some kind of like macroeconomic things going on in the world. That aside, how would you think about or advise an investment bank, even thinking about teaming up with a technology firm right now? What would they should be thinking about in terms of making that transition, becoming more technology driven, more efficient, as Dave and Michael were talking about? I know Finalis has been kind of building up a lot of different things like mandate marketplaces, et cetera, but how would you advise a firm to think about the adoption of technology right now?
Yeah, no, thanks a lot, Paul, for the question. I'll first add that Michael and Dave are very much already bought into the notion of digital transformation within investment banking, and I think they can speak to specific examples of ways that they've leveraged it internally. From our perspective, the high volume of activity that we're seeing in the M&A markets are in many ways a reflection of the fierce competition that boutique advisories in the lower middle market are facing to win deals. And that increased competition creates opportunities for firms that are really adept at leveraging technology to distinguish themselves from the pack. One of the things that we try to communicate in the context of what we can deliver here at Finalis is that by automating and streamlining the compliance back office, we're putting investment bankers in a position where they can level up their game. Many investment banks that have had the experience and in many cases the displeasure of having to interact with compliance know that there are many compliance checks along the life cycle of a transaction, and those compliance checks create opportunities for there to be bottlenecks in a process. And one of the things that we really pride ourselves on here at Finalis is that we're in a position through technology to move compliance at the speed of business, so that things like engagement letter approvals, marketing deck reviews, KYC, AML checks, and the like don't become blockers on deals, but actually enable our investment banking clients to move their deals forward.
It's really interesting. I'd love to drill in one specific thing you said there, Fed, which was, you were talking about like, hey, we've got this huge number of mandates that are in the marketplace. One of the things we sometimes hear from prospects for Affinity is that I'm actually too busy executing and making money, as it were, on these deals. But you're highlighting that there's actually a bit of a challenge there in terms of a lot of the firms that you're talking to that need to step beyond that like idea of like, oh, I'm too busy right now. We need to be much more competitive over the long term.
Yeah, I mean, it's a great question. In fact, ask just about any investment banker how much time they're currently spending on business development, and then ask them how much time would they like to be spending on business development.
Right.
And I bet you that second number is going to be far higher than the first number. One of the things that we recognize at Finalis is that as we build a certain amount of scale on the platform, now with 130 banks, we have closer to 600 active mandates in market. In the lower middle market, among boutique advisories, there's a chronic oversupply and undersupply of deal flow. And so there's a tremendous opportunity by being a platform that's now delivering the scale to start to exploit some really exciting network effects there. And so one of the ways that we've done that is through an environment that we call a mandate marketplace, which is a place where investment bankers can solicit and opt into collaboration opportunities on mandates that are currently sitting on the Finalis platform. But something else is starting to happen, which is quite interesting, which is that just by virtue of having so many investment banks on the same platform, Finalis itself has become a magnet for new deal flow. And that is basically worked out on the basis of corporates that are now looking to connect to quality investment bankers that have relationships with the investor and buy side community. And I think that it really foretells some really exciting developments through the mandate marketplace in the days to come.
Awesome. I don't know, Michael or Dave, do you have any thoughts on this idea of like we're too busy to invest in technology because of all of the mandates that are available, or is that just not a thoughtful response that we're seeing from some folks?
Yeah, no, Paul, look, I mean, business development and keeping pipeline is everything to a small boutique firm. You've got to keep that pipeline moving and not get fully engaged in every transaction you're working on, assuming you've got additional resources to do that. And luckily in our firm, I spearhead a lot of the business development and relationship sides of our activities. And so I've got a team to rely on to help continue to move the needle on the execution while we're out there filling the next 12 to 18 months of pipeline. And so that's the piece that on the data side of it is really important when it comes to the strategic marketing and keeping in front of, as Fed says, like being involved in the collaboration of mandates inside of the broker dealer. I think those are very important things to feed the machine. It's not always just one activity. I'm going to go to a trade show or conference and come back with 5 deals. I think we all recognize in this industry, relationships aren't built, in a day. They're built over a long period of time, especially when it comes to the sale of the business. So from our end of the equation, the more tools that we have technology-wise to expand our reach and touch more people, the better off we'll be in casting a wide net.
Awesome. No, I think that's a very good point. Maybe if we move on to our next thing here, as we think about the actual kind of deal execution and management side of this, I feel like one of the big things here is about firms kind of winning mandates because they're able to get deals done in the most efficient and high value way. We all know that's one of the reasons that you guys win the mandates themselves. We're going to talk about this in more detail in a moment, but I'd love to hear your thoughts on something you mentioned earlier, which was the kind of concern around like the dealing with compliance and how that can slow down kind of deal execution and management as a whole. I'd love to hear your thoughts on like how Finalis is helping to solve for that, but more generally, like how does the idea of compliance management and compliance work actually help some of these boutique firms move faster?
Yeah, it's a really good question. The first thing that I would say is that the industry has, for the lower middle market, investment bank has evolved in a pretty unusual way as it relates to outsourced compliance, which is a notion of effectively the back office trying to take over the front office. In other words, the third party broker dealer not really treating their investment banking affiliates like the customers and money makers that they are, right? I mean, these are truly the producers. They are the oxygen that breathes life into the back office. So we turn that model on its head. You know, we actually treat our investment banking affiliates like customers. And what that means is we have KPIs that we track internally on things like turnaround times, on engagement letter approvals, marketing deck reviews, and the like. And if a process is currently taking a day, we think about ways through technology to make that process take an hour. And if it takes an hour, we think about ways to reduce it even further, or to even anticipate the need before an investment banker realizes that they have the need. I think it's just a fundamentally different view with respect to how technology can drive value creation through the back office and ultimately add to our investment bankers' competitiveness in the landscape. And so I gave some examples of how that's manifest, whether it's engagement letters, KYC, AML checks, or the like. And there's a whole universe of API-driven KYC, AML solutions out there. I guarantee you that many analog broker dealers are not even actively exploring those types of solutions and are continuing to work out their back office functions the same way they have over the last 10 or 20 years. We just fundamentally reject that premise as a firm.
Awesome. I think it's a really interesting perspective of changing the lens at which all of this is being looked at, from just purely a service that's delivered to something that can help drive actually the improvement in the business efficiency. Dave, I'd be interested to hear, like, how much of your overall kind of deal flow, deal management process do you kind of automate or kind of build technology in today? Because I know that you're not always going to be able to do that for everything, but how far along that process are you? And especially as the size of shop that you are today, how has that had an impact on what you're doing?
Yeah, that's a great question. And as someone who has a 10-month-old daughter at home, I try to automate as much as I possibly can in my life right now and be extremely efficient in everything that I do. And obviously tech has helped me do that with my business. So, I initially think about the website and creation and the process to do something like that. Historically, I've had to hire a third-party shop and spend a month of development time. I've use a service like Wix to help me kind of make changes on the fly by myself. I'm not an expert by any means on development, but it provides tools where I can make those changes, and also ways to automate the marketing that I do with respect to email marketing, search engine optimization. So optimization is certainly important to me. I think, to touch on something that Fed mentioned with respect to compliance and some of the services that they provide that actually help the bankers, I've had firsthand experience with that, having just recently come over from another broker dealer, and the offering is just completely different. The timeline from when I submit materials, whether it's an engagement letter or marketing materials to get compliance sign off and approval, has been greatly reduced, and they provide an interface that enables me to interact with compliance officers kind of in real time, and they've definitely helped improve the way that I manage that process and the interactions that I ultimately have with my clients.
The last point is really interesting to me, which is, if you don't mind, I drill in a little bit further, which is, like, you're talking about how you interact with your clients as a result of this. One of the things that's pretty obvious in our industry is that a lot of this is about trust and really believing in how things are done so that you can know that you're going to get the outcome that you're looking for, especially with something as important as compliance. I guess there's a reason that things have been done the way that they've been done up till now. How did you build the trust that this was going to be the right approach for you, shifting to a much more technology-based process?
Is that a question for me, Paul?
Actually, I'd love to hear Dave's perspective on how he built up that trust. So Dave, I'll just finish up that question again. But thanks for jumping in, Fed. I'd really love to hear from you, Dave, in terms of how you built up the trust to make this shift to a completely different technology-driven model for something as important as compliance.
Yeah, so I actually got to know Fed over about a year, and he was building the Finalis platform. I was at another broker dealer. It didn't make sense for me to make the change at that time. I actually got in touch with Fed again. I saw a posting for a job that he had listed on LinkedIn that had to do with product development for some of these systems, and I thought, okay, that's really interesting. I've never seen a broker dealer, excuse me, post for that type of job. So I reached out to Fed. He provided the update this fall, and I was really impressed with the services that he said he was offering. And then obviously kind of coming onto the platform and seeing it in real time it's been great to see. I think just understanding that the broker dealers offering that tech angle, when as Fed kind of referred to them as analog broker dealers, there's definitely that change. I understood from other bankers that I'd spoken to on the platform that what he was selling was actually correct.
That's really interesting. And I'd love to come back to you in a moment around building up that trust from a vendor perspective in a moment. But Michael, in terms of you managing all of the deals that you're going for, you talk about your team taking over that. Well, you can so you can focus a little bit more on business development, but obviously you're still involved on a day-to-day basis. I'd love to hear from you a little bit about how you're using technology to get your deals done. I know you're using multiple platforms or a number of different platforms to do that, but maybe all the way from like your marketing automation, which Dave pointed out, but also managing things through the actual process of driving the deal through to close.
Sure. Yeah. I mean, Paul, our big, our sales funnel is driven heavily by Affinity, due to the fact that, the email communication tools that Affinity offers allows us to reach a much more significant audience. So from that side of it, we can cast even a bigger net than we were able to do when we were on Salesforce. And so that was a huge change for us a couple of years ago to be able to widen the net. And then from there, a lot of our clients that we end up bringing on after we get through, our pitch, our engagement letter, et cetera, we're managing via a virtual data room. We use Firmex, and that data room from start to finish, whether they are a exit prep client that is not ready to sell but will be in 3 to 5 years, that we sign up early to get ready, or if we're engaging to go to market and we have to get something done in 6 to 8 months, everything, all of our data from a security perspective lives and breathes inside of our secure walls. And when we go out to clients, especially those that are tech savvy, they are expecting that their data in this environment, everything going on politically with Russia and the Ukraine, that if they are not convinced that their data is going to be in a secure place, and just shooting big documents that are large scale in email is kind of in the dinosaur realm today. You've got to be able to provide these solutions to them, and it really, in our mind, puts us in a different position when we interact with our clients as a result of that. They want to know their information is secure, and they want to know that our team, alongside me, are protecting that data, and it goes all the way through the compliance stuff that Fed just referenced as it relates to the broker dealer too.
That's really interesting. You're actually kind of calling this out as a differentiation for yourself, and it's still the case that you're able to kind of compete effectively in the marketplace that you're operating in because of one of the reasons is because of this differentiation you have.
Paul, 20 years ago, I would have never thought when I was developing a pitch book that my company would have a whole section dedicated to compliance and technology that we are using, the cyber insurance that we have, all of the other bells and whistles that really matter to a firm like ours to put us in a different echelon than others. So it's
Interesting.
and all that is cost. It's a hard cost that we're spending
Yeah.
that others may not be.
Got it. Oh, that makes total sense. And maybe we can drill into that a little bit further. Come back to that topic that we were talking about earlier, where Dave was talking about like how he built the trust in moving to the Finalis platform. How do you think about that from a vendor perspective, where you have this kind of like still existing older model that Michael was talking about out there, but you're well over 100 people on your platform now, and I'm sure hoping for many more. How have you built up the trust that people can use in use and taking advantage of your platform?
It's a great question. I think the first point that I would make is that any cybersecurity or data integrity effort is only as strong as its weakest element, right? And you can have the most technologically advanced and secure ecosystem, but if your broker-dealer backbone is still analog, then you have a point of failure, right?
Mm-hmm.
And so I think one of the things that we understood relatively early on, and we launched the platform in month 2 of COVID, was that this virtualization that we were seeing across so many industries wasn't going to leave any industry untouched. And the broker-dealer space was certainly one that had continued, for the last 2 decades to operate very much in an analog context. And so we built this infrastructure and we conceived of this infrastructure from day one, 100% in the cloud. And what that means is that every bit and byte of data that is flowing through Finalis's AWS servers is also locked in an Amazon Glacier environment, which is fully SEC compliant. And it is subject to SEC and FINRA audit as well. We also offer end-to-end encryption through the platform, which is extremely secure. So we thought about security and that data integrity from the moment that we started writing the very first line of code into the Finalis software solution. And so that's the first point that I would make. The second point that I would make as it relates to compliance and trust is that there is no more trust-filled relationship that needs to exist between than that exists between an investment bank and their broker-dealer or their compliance officer. Because at the end of the day, it's the compliance officer that is protecting the investment banker's regulatory licenses, as well as ensuring that the investment bank and the investment banker is staying out of trouble in a variety of different ways, right? Both from the engagement letter review process to the KYC AML process, to clearing the transactions, to filing the monthly SEC focus reports and the like. So it is, you don't get more trust than that. And we realized that early on, which is why, as we've been growing, we've actually been handicapping our growth to a certain extent by not letting everybody that applies to join the platform onto the platform. We actually have a membership interview process in which we cull the types of folks that are soliciting us and wanting to join the platform because they might represent a risk profile or might be operating in an industry that we're uncomfortable with. In addition to that, we have a very robust relationship with the regulator. And it's in that relationship, which is very much a two-way street in the sense of actually helping to also educate the regulator with respect to the opportunities for moving more of this regulatory environment into the cloud. It's in part reflected by the fact that now even FINRA has come out and said that remote exams are here to stay. That was something that they weren't entirely convinced of, but I think in the context of COVID, they saw the merits of that, and I think firms like Finalis are going to stand to really benefit from that shift in the perception around the opportunities for regulation and compliance to move more fully into the cloud.
It's awesome, Fed. Dave, I wonder to get your thoughts here quickly on. Michael talked about like competitive advantage from a technology perspective, but also specifically the kind of the compliance data. Is that something you see as well within your environment, and how you're able to kind of compete more effectively? Or is it more of the kind of insurance model that Fed was touching on a little bit as he was working through that?
Yeah, I mean, I think about it more in terms of the insurance aspect. It's an interesting point from Michael, and I will think about that in kind of creation of new marketing materials and conversations that I have with groups to understand, how much that plays a part in, developing a relationship with an investment bank. But again, I put a lot of my trust in Fed's group to make sure that I'm clearing the hurdles that I need to clear. Obviously, with respect to data security is super important, and being able to, I guess, be knowledgeable about that. If there are questions with respect to how I'm managing a data room and access to that material, and being able to provide reports as to who is actually accessing that information, that's extremely important to me, and it's something that I need to be able to communicate to my clients.
That makes sense. Yeah, that's great. Hey, Michael, just as a side point here, for those who aren't familiar with the Affinity platform, one of the key things that we do is we kind of plug into the data exhaust from kind of all of the email and all of the calendar activity that you have to build your CRM data. We talk a lot about saving huge amounts of time, not having to do the drudgery of data entry into a CRM. I know that you had a big impact in terms of turning on Affinity, in terms of capturing context, etc. But how do you think about the compliance side of capturing that type of data and using it as an asset when you're kind of building out that CRM? Because we do hear some concerns from investment banking and advisory firms around, well, we don't really sure if we want to have all of that data stored and captured as we kind of like develop our relationships.
Yeah, I mean, there's a delicate balance, but I'll give you an example of where it becomes most useful for firms like ours is all the internal collaboration on a deal, right? So there are conversations, David, you probably deal with this when you're dealing with lenders, investors that are looking at particular transactions, and there's a lot of insights that you're garnering from what they're interested in, why they're interested in it, how they're thinking about it from a leverage perspective. I want to gather and capture as much of that information that I can in order to share it with our deal team so everybody's fully up to speed on the transaction. Because what ends up happening is we're in a hybrid environment through COVID. People are working remotely and everywhere, and being able to harness the data to make the internal communications even better, but also when we get on the phone with our clients and we give them updates on, hey, here's what's going on with ABC private equity firm and this strategic buyer, it's known, it's available, and it's accessible versus it all sitting in somebody's Excel spreadsheet. And so from that side of it, that's how we've really utilized Affinity from a just to maximize our return on what's there, is just from putting as much information that we feel is appropriate into it so we can inform everyone around the deal process. It makes us that much better with our clients, all the way down to our junior analysts that are trying to write a book on a particular company.
Awesome. That leads us into our final topic here, which is the use of data and analytics in this world. I think it's probably fair to say that I'm not sure that analytics and usage of analytics has really kind of embedded itself into the mainstream of investment banking and advisory quite yet. As you know, Michael, we provide a fair amount of kind of analytics on our CRM data. I'd love to hear your perspective on it. You touched on it a little bit there, of like how you actually can use some of this data, or where the industry is in using some of the data that's coming out of these deal processes.
Yeah, I mean, for my end of it, I mean, the data capture side of it is whether it's simply an email, Paul, or it's a phone number, or how we're text messaging with certain people, whether it's clients or prospects. I mean, all we are trying, I feel like every day of my life, I feel like all I'm doing is focusing on data, whether it's numbers for our clients or data internally. So it's all about, data's great, but if you don't figure out how to use it to your advantage, what's the point of it, right? And so we're always trying to figure out inside of what we're gathering how we can use it and put it to work in some fashion. As an example, when we go to a trade show or a conference, there's all this information that we come back with on market trends, data that we then try to pull in and put into our database. We have to scan, pull it in, or pull it from an application and get it into the system to share it, and then figure out how we use that for marketing purposes. But those steps that I just described, there's time, effort, and money that goes into that. But if you can harness it and use different pieces of it, it becomes extremely useful when you're in the market selling a company, because then you could apply that information to the deal.
Awesome, thanks. Dave, I don't, again, I'm not fully familiar with how your company is using data and analytics or where we are on that spectrum, but what's your perspective on this kind of much more analytical driven, much more kind of using of the data that you see on whichever platforms that you're using and as part of either your marketing or your actual deal flow efforts?
Yeah, I mean, I think that that information capture is extremely important because it can help you improve that conversation that you're having with the counterparty. Like Michael was saying, you try to ingest all this information from some of these conferences. I look for ways that I can automate that input, and from what I've learned from Affinity, Affinity does a lot of automation of that import of information from your email account. So new to the service, but really impressed with just the time that's actually needed to bring a lot of that information into the CRM. That was always something that I was concerned about going over a new CRM as a small shop, is how much time it would actually take me to get all of my contacts and data that I have in spreadsheets or notes or in emails into that platform. And it sounds like for Affinity, you guys do a lot of that stuff automatically, which is really interesting as a small banker. For data analytics, it's interesting. I've had conversations with bankers that have developed proprietary tools to assess inbound deal flow and measure the likelihood of whether or not that deal can get done based upon certain business metrics that they're able to ingest. I haven't used that tech yet, but I'm interested to learn more and maybe potentially as a licensing arrangement. But it's interesting to see that there are certain groups and even boutique investment banks that are trying to develop that proprietary capability in addition to some of the larger platforms.
Yeah,
and I think go ahead.
Sorry, I was going to say we see a lot of the big banks developing like machine learning driven things, and they're there. But I agree with you. We're seeing the more boutique vendors starting to look at ways of taking advantage of at least some of those services.
That's right. And in speaking with the Affinity team, it seems like there are analytics and ways to measure your kind of your place in the market against industry averages, which is really interesting. One thing that could also be interesting from a boutique investment banker's perspective is measuring kind of your pricing and in terms of your engagement agreements against an average at your own broker dealer, or maybe a larger average across larger broker dealers too. But just to see if you're in the right ballpark when you go out to your client.
Yeah, making you much more competitive or at least knowledgeable about how competitive you are in those things. Fed, I'd love to hear your perspective on this, because Finalis touches so much of the entire workflow for these firms. How are you thinking about, or how do you think the industry should be thinking about using analytics or even some of these more advanced things that Dave was mentioning around, like applying machine learning or artificial intelligence to things like deal flow?
Yeah, it's a really good question. I think I probably would bifurcate that into opportunities to leverage big data in the back office versus our investment bank's front offices. So I can kind of tackle each in turn. From a back office perspective, we spend a lot of time thinking about ways in which we can inform better data gathering and decision making among our compliance officers to speed up the velocity of the compliance solution that we offer our affiliates, right? As I mentioned earlier, we're obsessively focused over driving that turnaround time down. And oftentimes the answer to doing that is through automation, but that it's automation on the basis of better or more effective data gathering and pooling of data and analytics, so that we're surfacing the right information at the right time to a Series 24 holder compliance officer who can then render a decision to really move compliance at the speed of business. So that's a back office consideration, but it also can influence things such as being able to do better, more effective email surveillance or outside brokerage account surveillance, right? So those are the types of things that we think about from a back office perspective. From a front office perspective, we think about all of the ways in which the unique data store that Finalis is collecting on the basis of all of the deal flow that's flowing through the Finalis platform can actually serve to benefit all of our affiliates. And I think Dave was alluding to earlier was this notion of being able to benchmark fees. What's a really good point, and it's in fact exactly a product that is about to be rolled out through the Finalis platform in connection with the mandate marketplace, is going to be the ability to actually do a fee run on the basis of the aggregate deal flow that is sitting on the Finalis platform. Now, that being said, it's important to point out that any participation within the mandate marketplace is predicated on a give to get basis and is fully anonymized. So if investment banks, for whatever reason, don't want to participate in the fee run, they don't have to. They're, of course, not going to get the benefit of being able to see the data of the others that do choose to participate. But that's just one example of the ways in which we can deliver data-driven value on the basis of the unique data that we're able to collect. Because, of course, fee benchmarking isn't an easy thing to do if you're a sole proprietorship, iBank, or even a 10 or 20 person organization. These tend to be the types of data stores that are fully available to a bulge bracket or a large boutique investment bank. But Finalis, on the basis of being effectively the rails upon which the long tail boutique iBank is establishing themselves onto, is in a position to aggregate that data and share it wherever it makes sense.
That's awesome. I think there's some really innovative thinking happening there in terms of changing how we kind of consume and use this data, which I think is going to be an important thing. At this point, I'd love to continue the conversation, but we're reaching our time here. But thank you so much, guys, for joining me. Fed, Dave, and Michael. It was a really informative and entertaining conversation. If you are ready to kind of look at one or both of the solutions that we talked about today, feel free to visit affinity.co/demo and talk to Finalis about the application process that Fed was outlining at finalis.com/apply now. And that will give you a great insight into what's going to be possible next. Again, gentlemen, thank you so much for your time, and we'll conclude.
Thank you all.
Michael,
Thank you.
We're done. Michael, sound, did that come out okay? Michael?